All right, Bitcoin Cash, let's get into some technical analysis. So I'm here on the 3-month, and this is going to be an analysis for the beginning of Q2. So starting out, I'll just go ahead and paint that picture on what we were looking at before. So we talked about this 3-month buy side inefficiency, not hitting external liquidity up here at 718, right? That was my target on the bullish side. So you can see that first candle test the area, and the second candle, the October 2024, that quarter, the end of Q4, was supposed to hit external liquidity. That's at least what I was anticipating to happen. And you can see we fell short of that. And so when you fall short of external range liquidity, leaving an internal source, the target tends to be the swing low that entered your internal source. So let me just draw that out for you. So you can see that price reached into this internal range liquidity. We failed to hit external range, and so price then reversed back after the what I consider a fair value swing low, where those buys originally came in, right? So the buys came in inside of this area, which means those stop losses, right? The stop losses of those buyers that were in this run up sit below these areas, right? These lows here, this low from October 2024 and this low from July 2024, especially this low because it is a swing low, okay? And you can see how price just came right down during the first quarter and literally goes just below this fair value swing low. All right, now we have the new quarter over here, Q2, and the question is, all right, so what's next, right? So if you have not seen my video on Bitcoin, it is up now. It is a new video, and I am expecting Bitcoin to drop below 76,000. So if that was to happen, then I expect the rest of the market to drop, which means lower prices for Bitcoin Cash. All right. In a previous video, I spoke about these areas down here on the 3-month and 6-month level also being areas where price could drop down to. This is down here at 166. But I want to talk about some more near-term price levels that price is likely going to hit over the next few weeks. So take a look at this most current candle that has just opened, right? Our Q2 candle right here. And look at this candle in relation to the previous quarter. If price wanted to take out a level of liquidity, whether it be buy side up here at the high of Q1 or sell side at the low of Q1, which one do you think would be easier to hit? Would it be easier just to drop down here and take out the low, or easier to climb through this entire candle range just to get back to the high? To me, it's easier for price to just drop down and take out the sell side liquidity because we're so much closer to it. Because we're on such a high time frame, inside bars are extremely rare. So this is another confluence as to why I believe Bitcoin Cash will first revisit the low of Q1, and that low comes in at 269.93. All right, dropping down to the monthly, you can get a closer look at that. As far as any type of inefficiency or patterns in here, there's nothing really that catches my eye. It's more so what's on the weekly chart. Okay, so if I drop down to the weekly, take a look at this. In this area right here, I believe I spoke about this in the previous video, but we had this sell side imbalance on the weekly. We reached into it during the first week of March, got a really nice wick, and we actually closed outside of the imbalance. But take a look at this candle's range. I'm just going to draw it out. Here's the high and here's the low. Look at how many weeks we actually stayed within this range before finally breaking out. The very next week was an inside bar relative to the previous week. The following week, we were still inside that massive wick to the high and low from March 3rd. The third week, we still could not break out of that range. Finally, just this past week, going into the first week of April, we were able to take out the low. All right. But you have to remember, we're a part of an internal to external setup. So if I draw it out using the arrow, you have this internal range liquidity, and price is following through still to this external range liquidity. And what do you know? That external range liquidity sits right at 269. All right. So again, another confluence as to why I believe price is likely going to go below 269. Okay. Is there anything underneath here? So if I just zoom out a little bit, we do have another area of liquidity if price so decides to continue going lower. It's going to be this swing low right here. So this swing low is from February 19th of 2024. The reason for that is because this swing low previously offered fair value to this buy side imbalance. So if price is seeking sell side liquidity, it's likely going to go below this low because that's where the buys came into the market. Those buys would have sell side liquidity or stop losses sitting below it, okay? Because whatever you do to enter the market, your stop loss is the opposite. So if you were a buyer in here, and I'm not talking about day trading, I'm talking about if you were in a position like a position trade or a long-term trade, your stop loss is going to be below your entry in the form of a sell order. So after hitting external range liquidity here, we could continue lower, going straight after this pool of liquidity sitting right below this swing low. All right. And if things just continue to be bad, take a look at these relative equal lows here. You can see we have some ascending lows sitting right here, quite relative to each other, which is another area of sell side liquidity that price could sweep. And then right under that, we have the untouched buy side imbalances from the 6-month and the 3-month chart down here at $166. Okay, so it's not a case of, oh, there's nothing for price to go after. From a technical standpoint, there are a ton of sell side liquidity pools that price could definitely hit if price chooses to continue going lower. All right, it'd be nice to see a reversal after we hit this weekly external range liquidity, but you have to remember the sentiment right now. Okay, there's a lot of stuff going on in terms of macroeconomics. Tariffs are being funneled down to the consumer, and everybody's in heat right now. All right, so there's definitely reasons for altcoins to continue being weak. That's my analysis for Bitcoin Cash. I'd say just continue to keep an eye on this weekly sell side imbalance, see if we can get down to external range liquidity, and then pay attention to these other liquidity pools to see if the big one ultimately gets hit at $166. In terms of a bullish aspect, I would not consider this bullish until we got a close above 420. And it has to be a strong close, okay? Why 420? 420 is the fair value swing high here on this weekly chart right here. You see, this is the highest point that entered this sell side imbalance, okay? So I'd want to see a strong close above it, something like this, strong close above, come back, test it as support, and then go after the next liquidity pool. Until then, I would consider this very bearish. Last thing, looking down at the daily, if I just zoom in over here, the most recent thing that happened was price going into a sell side imbalance on the daily. You can see that right here. And then we failed to hit external range liquidity down here at this previous swing low. That does not mean that it's time for a reversal. Again, if I was looking for a reversal in the near term, I'd want to see a strong close above this fair value swing high from a daily perspective. Okay, so I'd want to see a close above this, come back, find some support, and then continue on towards the weekly fair value swing high. All right, so just moving out like a telescope, but still looking for the exact same thing. Okay, otherwise, expect this to continue being bearish, and as price develops, I will give you guys a new update. All right, have a good one.